Not even the bankers in Denmark could believe what has happened. Because of the ridiculous policy of negative interest rates in several countries, mortgage rates actually declined below the zero mark. Imagine you borrow money from the bank and instead of paying interest, they pay it to you. Do you think that this may cause some problems down the road? You came here for the truth, so let me unveil that for you. Today we're going to talk about Denmark. This is one country that has been the extreme example of what happens when you screw around as a central bank. They have created a policy which is unprecedented historically. They're not alone, of course. We've seen other countries do this. Look around the world, we have seen $11 trillion worth of bonds actually trading at a negative yield. Imagine you invest in something you know you're going to lose. My goodness, how could they sell these things? Now, obviously, the central bank loves these, but it's not just them. There are companies, corporations, institutions that have been purchasing all of this negative yielding debt. I think it's crazy, but that's what we're in today. I'm going to go through everything to deal with Denmark, with negative interest rates and the mortgages today and everything that's happening with real estate. I want you to stay tuned for a jam-packed episode. Let's begin. Bankers stunned as negative rates sweep across Danish mortgages. This is out of Bloomberg. And if I show you here at the biggest mortgage bank in the world's largest covered bond market, a banker took a few steps away from his desk this week to make sure his eyes weren't deceiving him. As mortgage bond refinancing auctions came to a close in Denmark, it was clear that homeowners in the country were about to get negative interest rates on their loans for all maturities through to 5 years, representing multiple all-time lows for borrowing costs. That is insane. Imagine the fact you get paid to take a mortgage. Do you not think that this would create some serious issues? Of course, it goes without saying. During this week's auctions, there were 3 times when I had to stand back a little from my screen and raise my eyebrows. Even the bankers are freaking out about what's going on. For 1-year adjustable rate mortgage bonds, this particular company's refinancing auctions resulted in a negative rate of 0.23%. The 3-year was minus 0.28, and you had the 5-year at just below zero. Obviously, it's not a negative rate that's 5% or 10% or something crazy, but it is actually in the negative. Now, this could change at any moment, obviously, especially when we have adjustable rate mortgages. They fluctuate, but it just shows you the example in this case here where individuals are able to get into things that they actually couldn't normally afford, but because of the unprecedented measures taken by the central banks, this of course shows us how far they're willing to go, and we will be able to document what has happened as a result. Here are the interest rates in Denmark, and as you can see over time, they have gotten lower and lower and lower, and you're looking here back in the 90s where they peaked out at 15%. But you will say that's a long time ago, my goodness. Well, it happens over and over again. You can see that throughout the 2000s, they remained at, between this 5% mark, going as low as after this point here, probably let's say 2% or so, and then the recession came when they peaked out, and just after peaking out, as you can see right here, they dropped them down, and this continued for a little while until they realized in 2015, when the whole world started to think this is it, we are now heading into a global recession. They brought interest rates down into not zero, but the negative, actually into the negative, and I could probably get in a little bit closer here to show you that. And you're looking at it just below zero, not quite to negative 1%, but essentially here we are. And they had been playing around with that level, but you can see basically from after the financial crisis time frame at exceeding 3%, and then it came down right here through into 2010 and beyond. Negative interest rates obviously having an impact on mortgage rates and so on. Danish mortgage lenders get ready for record low interest rates. 2 Danish mortgage lenders are prepared to issue 30-year mortgages at a fixed rate of 1%, the lowest ever in Denmark and one of the lowest in the world. So those were the adjustable rate mortgages, and you can see here in this case, fixed rate, 30 years at 1%. It's basically free at this point. And if I'm not mistaken, I believe we saw a 0.99 in the UK that could have been an adjustable rate, but regardless, we've seen these low rates going lower and lower and lower, and ultimately right now this is one of the most extreme examples that we've ever seen. We are watching what central banks are doing in slow motion, and they will create the biggest crisis the world has ever seen. At the bottom, they're talking about Germany's 10-year government bond yield actually going below 0%. So if you want to buy Germany's debt, you can actually have the privilege to do so and lose money. Think about the craziness, the insanity that this is. We are creating a policy in which central banks can do whatever they want, whenever they want, and your currency is at stake. That's what goes on today. We are watching all of these central banks messing up the entire world, and nobody has a say. Looking at the real estate in Denmark here, Denmark has continued to see prices increase throughout 2018, a trend caused mainly by the negative bank interest rates. Thank you for taking the words out of my mouth. In the year to February 2018, prices rose by nearly 8% when compared to the same period in the previous year, which saw increases of 6.8%. So they've been increasing at a rapid pace here. I mean, real estate should be a very slow and steady rise that we should have over a period of time, but instead you bring interest rates down into the negative and then people are buying. But is it the people of Denmark that are purchasing? Well, we'll talk more about that in a moment. Prices in Copenhagen increased at 10% a year. I mean, that is unbelievable when you look at real estate. That's some of the hottest markets in the United States. And I've shown you that before when we had the price increases, crazy price increases in Seattle and Las Vegas and other areas that were going just above that 10% mark. So just to give you an idea comparatively. This is talking about who's purchasing the real estate in Denmark. The players are predominantly institutional investors, Danish and non-Danish, real estate funds, and property developers. Okay, it's not actually the average individual who has been buying at this rapid pace. We are seeing the institutions, the big money, both foreign and from Denmark, that are buying a lot of this real estate. The market has generally been seen as very attractive in recent years for both local and foreign investors, and the fundamentals remain strong, particularly in larger cities like Copenhagen. Of course, fundamentally, if you look at it, the interest rates are being forced down by the central bank, so we have to disagree on that point for just a moment. If you were to actually allow the market to decide the price, decide the interest rates, then of course you wouldn't see this at all. You would see interest rates being higher, but they have to engage in open market operations. They have to actually print money in order to keep those down, and they devalue the currency. And of course, you will see time and time again that these countries here will suffer because of the central bank, whether it's the ECB, whether it's other central banks around the world that are doing this in their respective countries. And unfortunately, the average individual always gets screwed over as a result of this. This is just continuing on with what we were talking about with the bonds. Denmark finances its home loans through the world's biggest covered bond market. The securities are coveted as some of the safest around thanks to the huge covered pools backing the debt. This is interesting. Even during the Napoleon era, when the Kingdom of Denmark defaulted on its loans, the country's mortgage bond market carried on without any major disruptions. That's fine. That's great. They're telling you the fundamentals are all there. Historically, everything has been fine. But the issue that I have here is that central banks are creating a policy which cannot be reversed. You cannot reverse negative interest rates. If you look historically all over the world, all of these different countries are creating themselves a huge disaster for the future. I do believe that this is being done on purpose, but you can take it however you want it. There is no other way to look at all of this data and think, well, no, it's going to end well. No, in my opinion, this right here tells us that we are in for a world of hurt. Look at the insanity continuing. You've probably heard of this before. The skyscraper, my goodness, skyscraper in the middle of a town of 7,000 people. 7,000 people, they live in all these smaller communities like this, and they're building a tower in the middle. This right here shows you how crazy things have become. The same thing is going on all over the world, and you know when they start building these tall skyscrapers in the major cities around the world, generally that coincides with the peak of the construction boom as well as what you see with the economy itself. Time and time again, they screw up, and we just have to pinpoint all of the mistakes that they are making in order to be able to prepare for ourselves. That's it. If you found the video informative, please give me a thumbs up. When you give me a like on this video, you're supporting me, supporting this channel and the truth, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need. All the details that you need from the asset classes, talking about real estate, talking about debt and interest rates and central banks. So all of that is at the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to know the real deal of what's happening in the economy, you need to watch this video. Check it out, and I will see you there.